I'm making a big change to my investing portfolio, and it might be time for you to consider making a big change as well. I've been investing for over 10 years, and I'm a university professor who does a crazy amount of research on pretty much anything, but especially finance and the stock market. So my current research has led me to start making a bit of a shift. In this video, I'm going to explain my big change, and I'd love to know in the comments section how you're investing. So go ahead and leave a comment down below, because it's always fun for me to learn how my amazing students are investing, and I could learn from you. So go ahead and leave a comment down below. I recently took a trip to Bali and used that time to mostly unplug from work and day-to-day business, but also to recharge in the way of research to figure out some things for you all and for myself. What I learned and came to the realization of will be groundbreaking for my finances, and I hope for yours as well. So if you're somewhat newer to investing and you have less than $100,000 invested, then you're going to want to invest just a little bit differently than those that have much more invested. So I'll explain how I'd invest today if I had $0 invested, then I'll explain how I'd invest from $100,000 to $250,000, then I'll explain how I'm investing now, so for those of you over $250,000. So if I had $0 invested and I was starting out today, I'd have the big 4 staples done no matter what. The first one is to make sure and understand what money's coming in and what money's going out, so basically putting together at least a simple budget. Number 2 would be amassing somewhat of an emergency fund of at least $1,000, doing whatever I can to get $1,000 saved up. This is completely emergency. This is not for anything else other than if some big expense comes up. Number 3 would be taking my company's 401k match. If your company offers a match, this is basically free money. Just make sure and take it. And then number 4 would be making sure that I have no consumer debt. So that would be credit cards or high interest debt. I would be making sure to pay all of that down before I even started investing. Once I have all 4 of those completely done, then I would be starting to invest, and I'd be investing in my 3-fund portfolio that I talk about on this channel. I've made many videos on why this is the best 3-fund portfolio, and it's taking over the investing world right now, so I'll link to that video down below, and after this video you can watch. But I'd be getting 33% of my money in a dividend or value ETF like SCHD, 33% of my money into the S&P 500 like VU, and 33% into a growth ETF like QQQM or SCHG. I'd be putting my head down and grinding. I'd cut back on expenses. I'd do a side hustle. I'd try to earn more money at my job by working overtime or getting extra assignments. And then every single extra dollar that I make would be thrown straight into investing with the goal to hit that $100,000 no matter what. The magic of investing starts when you hit your first $100,000. Believe me, and it's literally crazy how fast it grows after that. For those of you that hit $100,000 in investing, congratulations, and now you're on that next level between $100,000 and $250,000. And at this level, it's still the goal to grow at all costs. But now it's time to start thinking about preserving a little bit of that wealth. Because it's not just about making the most gain, it's also about having the least loss. Before we get into that, I want to thank and introduce the sponsor of this video, Delete Me. The whole premise in this video is to keep you safe in investing, but even more important is safety and privacy online. Did you know that your personal data is sold online by data brokers? You have the right to stay private and protect your personal data. Since my businesses are run almost entirely online, this service is very important to me. I work with confidential things like investment accounts and bank accounts, and so this is so huge. Delete Me is a hands-free subscription service that will remove your personal information that's being sold online. Delete Me's privacy experts remove your personal information like phone number, address, and other private info from hundreds of data brokers all year long. And you get a privacy report in 7 days. I really like that customers can make custom removal requests. I also like that this company is headquartered here in the United States, which gives me extra peace of mind. We all do so much online these days, and so it's just very wise to keep yourself protected. Get 20% off Delete Me US consumer plans when you go down to the link down in my description, which is joindeleteme.com/professor, and use code PROFESSOR at checkout. So if you're in that category of $100,000 to $250,000, you need to keep going strong at your job, strong at your side hustle, keeping those expenses down, but you should also be adding just a little bit more to that high yield savings account from before so that your emergency fund grows to a bigger amount. If the stock market drops like crazy, like say 50%, As long as you don't need the money that year, you're fine, so it's not a big deal. But if you get in a car crash or if your roof needs a replacement or something and you need a huge expense, something like $20,000, you may need to pull that money out of the stock market when it has lost 50%, so now you just eroded that wealth. If you have a bigger emergency fund built up and crisis comes, now you can use the money from that fund rather than pulling money out of the stock market and letting that stock market just go ahead and do what it always does and come back. I recommend trying to build up to 6 to 12 months of living expenses in your emergency fund while you're still working on getting from $100,000 to $250,000 invested. Now for the big change that I'm making in my investing portfolio. And this is for those of you that are over $250,000 invested, or just for those of you that want to know what to do when you get to that point. So now by this point, you'll have cleared out all debt, literally no debt except maybe the mortgage on your house and maybe a car payment, as long as the interest rate is low. By this point, you'll have been taking advantage of the company match for your 401k and building that up. You should also have 6 months to a year of living expenses in a high yield savings account. But most importantly, up until this point, you'll have been investing rain or shine every paycheck or every month into the 3 categories I speak about on this channel. You will have not been trying to time the market and you'll just have been dollar cost averaging to get to this point. And that's exactly what I've done up until now. So here's my big change. The more that I've researched about absolute beasts in the stock market and real estate investing world, they have a couple of things in common, and you need to have both of them if you're going to try to go from $250,000 all the way up to $2 million. Every one of these people were actively invested in multiple assets, but the most important thing there is actively invested. They never held 100% of cash off to the side to wait until the market crashed to invest all their money. So whether the stock market was up or down, they still had money in the market working for them. Like Mr. Wonderful says, treat your money like soldiers and make it go out there and fight for you. So that's number 1. Number 2, though, is that these mega investors have patience and continue their research always. They understand that the market is cyclical and that even more than that, our economy is cyclical and people's emotions are consistently getting the better of them. For this reason, these investors had a portion of their wealth held in cash. But it's different than taking all of your money out of the stock market and just hoping for a huge crash. It's also different than putting money into a high yield savings account for an emergency fund. Those are totally different things. This money that I'm talking about is held within the investment account or easily transferable to the investment account, maybe in the money market, so that the second that stocks or good ETFs go on a mega sale, they can just plunge all of that money directly into that asset. I remember in March of 2020, I watched the stock market get cut in half. I saw the news and saw the world going crazy over this COVID thing. I thought about it and I thought there was 2 things that could happen. Either we're all gonna die so it doesn't really matter, or number 2, we're gonna figure this thing out, and that means that business is gonna have to continue as usual because businesses are incentivized to make profit, and we as investors get that money back in the stock return if they make their profits. So I plunged all my investable amount of cash in the S&P 500 and SCHD and some growth ETFs, and now that investment's up over 90%. The problem was, at the time, I didn't have a lot of cash. So what actually is the big change that I'm talking about here? The big change is not completely trying to time the market. I don't know when or even if the stock market's going to dip anytime in the near future. I am fairly certain that over the next 10 years or something, there will be a substantial enough dip that I would have wished that I had some money off to the side for that specifically. So right now, with about 70 to 80% of my disposable income, that extra amount of money that's not being used for expenses or anything else, I'm still putting that into my investing account and investing in the 3-fund portfolio that I always talk about on this channel, no matter what, even if it's at all-time highs like a lot of them have been. But for 20 to 30% of that disposable income, I am keeping that in a high yield savings account off to the side, different than my emergency fund, and that's all earmarked for if a dip happens over the next couple years. The reason why this works now and not when you only have like say $10,000 or $20,000 invested is because you do need skin in the game to make compound interest work for you during this period. If you have $20,000 in and the stock market jumps 30%, great, you just made $6,000 that year. If you have $200,000 invested and it jumps 30%, You just made $60,000 in 1 year, which is more than some people's full-time jobs. That kind of appreciation can be life-changing at that amount, so you want that money invested to work for you. Once you have that solidified and you have enough money in the market working for you, now you can be a little bit patient with a small portion of that disposable income, having that off to the side and ready to pounce once it does drop. I'm still huge on dollar cost averaging and will be doing it with most of my investable money for the rest of my life, but this strategy that people like Warren Buffett have been using for years is one that I really find fascinating. Check out this video to keep you going strong in your investing journey, or watch this one and let me know what you think.